Well, the Reserve Bank has sent a clear warning today. Inflation remains a problem in this country. And if you're a mortgage holder, don't expect any rate cuts for the rest of the year. Labor's economic mismanagement is continuing to hurt us all as it spends its way into oblivion, while its band-aid energy subsidies are driving up inflation. Now, the Reserve Bank has today kept interest rates on hold at 3.6%. In its decision, the RBA said inflation remains sticky and that price pressures are proving more persistent than hoped. It says inflation in the September quarter may be higher than expected at the time of the August statement on monetary policy, and that the decline in underlying inflation has slowed. Now, you recall the CPI rose 3% in the 12 months to August from 2.8%, which was above expectations. And today's RBA decision reveals that inflation is starting to rise in some sectors. So what's the common denominator? Well, it's electricity subsidies. They're starting to peter out at a federal and state level. AKA, you and I are still helping to pay for each other's electricity bills. And it was always going to be the case that once those subsidies start ending, prices will go up.
We have inflation back in a 2 to 3% band, both in underlying and headline. Headline is going to be volatile, as we've seen, because what happens when it happened in the monthly CPI when subsidies drop out for electricity, energy, the headline goes back up again. So we know that's going to be volatile. I can't say what that means for next month or the month after.
And look, subsidies are, of course, a great way to trick the Reserve Bank into thinking that Labor actually has a handle on the economy when it doesn't. And instead of lowering the cost of electricity by $275, as they promised they would, and improving the lives of Australians, as they promised they would, Labor pumped taxpayer-funded money into subsidies and then claimed it as some sort of inflation win. When the reality is that electricity prices are up 24% over the past year, and that's according to last week's inflation data. And you will see this very clearly in your next electricity bill. But Jim Chalmers has tried to tell us today that all is well.
We've seen interest rates cut 3 times already this year. When we came to office, interest rates were already rising. Inflation was around double what it is now and rising fast. We've been able to get inflation down. We've seen interest rates cut multiple times as a consequence. We've got real wages growing. We've kept unemployment low. We've got the budget in better nick. So all of that represents good progress.
Yeah, Jim Chalmers' budget is actually far from being in good nick. He was yesterday out there boasting of a smaller than expected $10 billion deficit, claiming it as good news. Now, I'm not sure what planet the Treasurer is on, thinking that any deficit is good.
We turned 2 very big Liberal deficits into 2 substantial Labor surpluses in our first 2 years, and now in our 3rd year, we've been able to get the deficit much smaller as well.
Well, what the Treasurer has failed to mention there is that gross debt is still expected to exceed more than $1 trillion. And it's all thanks to record government spending. Today, we found out that Jim Chalmers has presided over the biggest ramp-up in spending in 40 years outside of the pandemic. And that works out to be an 8% increase in spending in the last year alone. So we've got a situation where government spending is up at record levels, inflation remains persistent, economic growth is sluggish, there's been what's described as a material decline in living standards, and the RBA is today responding to it.
And while inflation has fallen a lot, the price level isn't coming back down. And this higher price level affects everyone, and it's been especially tough on people of lower incomes and the more vulnerable. This is why it's so important to keep inflation low and stable and unemployment as low as possible.
It means the potential for more rate cuts this year is all but off the table.
This is a direct consequence of the Albanese government's spending spree. There is a reason why rates have been higher for longer in Australia, and that is this Albanese government ensuring that they keep spending, and a big government approach is their mode of operation.
The reality is the RBA has hesitated today because Labor cannot give it the assurances it needs to cut rates again. This is not the economy that once made us one of the best in the world, and we're continuing to go broke and backwards under this government.